just to start out with, I mean, from my perspective, Dropbox is a high-growth software company. You got to comp it to, the high-growth software players, the Salesforces, Workday, ServiceNow, Atlassian type companies of the world. And from that vantage point, I mean, Dropbox trades at a pretty steep discount, even with the raised range. And I think, given investor preferences today, right, investors want a combination of high growth and good profitability, and Dropbox really crosses off both those buckets. I mean, it's one of the fastest software companies to cross $1 billion in revenue, I think second only to Salesforce.com, and they're doing that with 16% free cash flow margin. So good balance of growth and profitability there that I think people will like. Now, as we learned last Friday with Zscaler, IPOs can be unpredictable. They can pop dramatically day one. I'm not in that game of kind of trying to time what's going to happen with an IPO on day one. But I think from a longer term perspective, we could also see some of the numbers that we have out there prove to be conservative for Dropbox. And there could be upside to estimates and upside to that $22 price target from here.
And Gene, how should we be approaching Spotify here? Both because of the unconventional way it's going to be listed, and so we really don't know exactly how it's going to trade initially, and then just thinking about where it sits in this whole kind of new media world.
So big picture, Spotify is the leader in streaming music. They have 71 million subs, and the next biggest one is Apple Music at 38 million. They have been declining their churn, which is a critical metric over the last 2 years, from 7% a month to 5% a month. That's very good. And as a user, I can attest that this is a wonderful service. But as a stock, I think this is going to have a huge challenge to it. And the reason is twofold. First is on the profitability side. It's no secret, 79% cost of goods. Compare that to, because they're paying a ton back for that content to the artists and the record labels. Makes a lot of sense, but not a good business model. Compare that to Apple's services margins, which are, or their cost of goods sold for their services business, which is 22%, much lower than the 79%. And so I think what you have here is a headwind on the business model, and separately competition and differentiating this service is getting progressively more difficult in the future. So I love the service, but I don't think I love the stock.
Gee, what if the market starts to look at it like the Netflix for music and starts to give it the same kind of room to kind of grow into a valuation that they're giving Netflix?
If Spotify is successful at coming up with original music content, similar, I think that's what really differentiated Netflix. The catalog, the back catalog for Netflix, I don't think that's why it's done as well as it has. So maybe there's an opportunity for Spotify to have some proprietary music library. I think that probability is relatively low, but that would be the difference.
Rishi, here's the issue, I think, with both Spotify and Dropbox, is there these smaller companies that say, hey, we're taking on these behemoths that are also in our space, Google, Amazon, Apple, in pretty much both of their cases, and the argument for them is they're platform agnostic. But for every Netflix, there's a Pandora and a Fitbit that have gotten felled by that. So why aren't the giants going to absolutely squeeze the profitability out of both of these companies?
Yeah, it's a good question, and I mean, I think the big thing with Dropbox, to your point, is it's absolutely platform agnostic, right? If you're talking about using Microsoft OneDrive, it works best with Office 365. Maybe it doesn't play as nicely if you're a company that also is using the G Suite and Adobe products, and similarly with G Drive. So I think, especially for business use cases, and if you go through the Dropbox pitch, that's where they're starting to get a lot of their success, right? I mean, of all their 11 million paying users, 30% are Dropbox business users, another 50% are on an individual plan but using Dropbox for work. And I think that platform agnostic story is where it is, and just kind of the ease of use. I mean, from the customers I've talked to in this space, people like Dropbox. People think it's an easy to use product. It's something that's easy enough that my mom can use it herself on an individual basis. Getting that same ease of use to businesses and to teams is really where it's going to be. And when it comes to teams, they want to make the decision to buy products that they want to use. This is not a decision that's being driven by the CISO or the CIO of the organization.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.